Greg, can you say something?
I can hear you.
Greg is on as well. If we can get the Greg Foss presentation on the screen, pretty please. Greg Foss on the screen. Okay, guys, so we are going to get started. We'll let everybody kind of drift back in when they can. Thanks for everybody for making it here, getting through the registration. We've never had to process this many people, so we're constantly learning. So appreciate all of that. And I just wanted to say something actually before we get started. Something's hit. Yeah, I think you have to keep it in front of you. I just want to say something. Today when I got dressed, when I put this shirt on, I just want everybody to know, when I put the shirt on, I didn't do this just on a whim. I asked my wife if this shirt was okay to wear. And my wife said, yeah, no, that's a great shirt. You're allowed to wear that shirt. And I was like, oh my gosh, okay, thank you. And then I put these running shoes on, which I've never worn before. I have these running shoes. I'm like, oh my God, I'm gonna put running shoes on. And I'm like, oh man, can I wear like running shoes? I don't know, with this shirt. And then I asked my son, and Aiden said, yeah, Dad, you can do that. You're allowed to do that. And I asked my wife, I said, can I do this? And she said, yeah, absolutely, you can do that. And then I'm looking for Greg. Where is Greg? Hopefully he's coming. He comes in through the doors of this place. I'm about 20 feet away from him. I'm all excited to meet Greg. I put my arms out like I'm gonna give him a big hug. And you know what Greg does? He looks at me and he points and he goes, oh my God, what are you wearing? So I just wanted you to know that.
All right, don't take fashion advice from me, people, okay? So it's just...
Tell them what you said. I'm 6 feet.
I said he looks like he's dressed as 6 different people. Okay, now to be clear, my daughter is going out with a Croatian kid, and I love Croatians, okay? So you got a lot of Croatian in you, you got a little Italian, you got a little white,
Scottish.
You got a little
Scottish.
black. You're good. But listen, I'm not here to insult anybody except Trudeau. But at the end of the day...
I didn't know we were going to go right to the...
But
I was wondering how long could we hold Greg, but it's not going to be long.
But I'm not here to insult anyone. I just want to say a huge thank you to my buddies at Rockstar Real Estate, because I was on their podcast. That's the first podcast I ever did. And Tom and Nick have been instrumental in my ability to reach out to people and try and educate. I'm not trying to push education, but trying to implore the situation we're in as a country and how we're robbing the future from our children.
Okay, so with that, can you give everybody a bit of for those people who don't know Greg has become a really dear friend of ours, and could you give everyone a bit of your background so they know what experience you're coming from? I have some questions, I'm just gonna grab them.
So, my name's Greg Foss. I've spent 35 years as a trader on Wall Street and Bay Street. Most recently, I worked at a hedge fund through the great financial crisis and right up to the COVID crisis. And I'm just very concerned about the future for our children, because I think the people that are running the fiscal situation in our country, not just Canada, but actually most developed nations, are running it as drunken sailors. If you ran your real estate business like this, you'd be out of business. You'll see the numbers. So I've spent my life as a credit trader. So I was a junk bond trader. Distressed debt. I see what happens when companies over-lever themselves. And I don't want that to happen to our country, but it's happening in plain sight right now.
So just by way of example, like, is there a company name you could share where you were involved in buying and selling their debt, their credit?
Sure.
Just to paint a picture for people what you did?
On the good side, TELUS Communications. I'm not sure if you guys remember when Darren Entwistle, the CEO of TELUS, bought ClearNet Communications. It was a startup wireless carrier with no EBITDA, no free cash flow, but paid a sum of money to buy it, borrowed all the money from bond investors in the US and Canada, and those bonds proceeded to trade from 100 cents on the dollar down to 40 cents on the dollar because people were worried that he went out and overspent on an asset that was never going to, was jeopardizing the incumbent regional Bell operating company called TELUS. And when debt trades at 40 cents on the dollar, that's not an endorsement of a strategy. That's something on the cusp of default. Now, I called up Darren. I happen to have grown up in Montreal with him, and I said, dude, you need to issue some equity. You need to repair your image in the open markets. Crazy thing was, he was able to issue equity when debt is trading at 40 cents on the dollar. That doesn't usually happen. Most companies can't issue equity. He successfully raised equity from large pension funds in Canada, bought back the debt, mostly from US investors who thought TELUS was on its way to WorldCom. You remember Bernie Evers and WorldCom? WorldCom had the same accountants as TELUS. Wouldn't you know, Arthur Andersen. So, see, debt is a very dangerous game, but it's a contract. Don't ever forget the difference between debt and equity. Debt is a contractual obligation. And when you break that contract, the debt holder owns your company.
So to paint the picture for everyone, the credit markets are where people like you would go to play, buying and selling other people's debt.
Correct.
Correct?
Yep.
Do you want to go to your first slide? I have a bunch of questions for you. Or
yeah, 100%.
Yeah? Okay.
I mean, we have 30 minutes here. I'll have a lot of time outside in the hall afterwards if people have specific questions. But yeah, let's go. Let's start.
Tell me which one.
Now, this is a mishmash of different. Can I control it?
Of course.
Okay. So I just threw Tom. All right. Let's start with this one. Believe it or not, this is a chart that's produced by something called the Congressional Budget Office in the United States. Okay? And they are projecting by the year 2050 a total deficit as a percent of GDP of 15%. Now, this is deficit. They're running a deficit each year of 15% of their gross sales. And look at the combination of what makes up that deficit, people. Net interest, which is to say the government is on its way to ruin because they are in a debt spiral. The primary deficit in purple, think of that as your fixed costs, your entitlements to your population. Medicare, Medicaid, military spending. Right now in the year 2026, you'll see that it's a negative number, and the blue is your net interest cost. It's about $800 billion right now. Now, if that little in 2026 blue bar is $800 billion, look at the year 2050. What does that look like? I'm guesstimating that looks like $7 or $8 trillion of interest expense. Anybody here know what the gross domestic product of the United States is today? How much? Anyway, I'm going to tell you, it's 26 trillion. But here's the bigger question. What is government revenues? How much does the U.S. government take in tax revenues on an annual basis?
Anyone?
Those numbers aren't bad. It's actually $4 trillion. But if you're taking in $4 trillion and your interest expense is 1/4 of that, do you guys run a company that way? No. And particularly, do you run a company such that the only way you can pay your interest expense is by issuing more debt? No. Welcome to the United States government, people, because that's the way they're running their fiscal house. And they publish this. This is not my numbers. This is from the Congressional Budget Office.
It's like they should probably not advertise it.
Sorry?
They shouldn't advertise this.
Well,
I know, but they do. So my question to you is, we didn't mention, are we allowed to talk about your business, some of your business interests, Montreal? No?
Not yet.
No? Okay.
Let's go through this because I want people, you guys.
I've already lost control.
By the way, listen. What's that?
I said I've already lost control.
No. You guys give yourselves a hand for being here today because you are out trying to build your business and build your future responsibly. So on a Saturday morning, I applaud you all for coming out to listen, okay? These fucking monkeys who are running our governments are sitting around the pool smoking cigars thinking we're all brain dead and then publishing this stuff, okay? This is robbing from the future of our children. This is highway robbery, and the only way it exists is because they can print money. The only way to solve this is with the money printer. Oh, don't worry, we're going to buy the votes of the population by creating UBI, Universal Basic Income, okay? Okay, that's the USA. This is the distribution of debt in the USA. I'll get back to that. That's my name. I'm going in the wrong direction.
Hold on. I had this zoomed in for you. That one?
Okay.
There we go.
So what? That's the USA, Foss. Who the fuck cares? Oh! Where's Canada in this whole thing? At the top of the ladder. And we don't even publish stuff like the USA does.
Yeah, we really don't.
We keep that quiet, you know, because Trudeau says the budget will balance itself. Now, this is criminal. You cannot say that, Mr. Trudeau. I know you're mathematically challenged, but if you were the CEO of a company, and you said that, your shareholders should fire your ass. But I'm not here for political reasons. I'm just here to call out the bullshit. Canada is the worst. And this is disgusting because I am passing this debt burden on to my children. And if you can look yourself in the mirror in the morning and feel good about the fiscal situation that Canada's in, I suggest you get a different mirror or go work with Trudeau and pretend it doesn't exist.
So I really need to ask you, you keep saying it's for the children and you're doing that. 10 years from now, if this trend continues, what do you think your children are going to be faced with? Paint the world for us in 10 years when this continues.
There is a chance Canada has defaulted on its debt and that we are no longer a G7 nation, and we are hostage to a restructuring in the likes of Argentina and Venezuela.
So the IMF coming in and controlling our finances?
IMF has lost control of the world already. IMF can't do shit.
Something like that?
Because we are a G7 country. We are not a G20. We have an economy that's smaller than California, right? Canada has a GDP less than the size of the state of California, but it's still the 7th largest economy in the world.
So we would lose control of our finances as a country?
We would lose control of just about everything. It could be anarchy. But I'm not trying to paint that picture. I'm just giving you the mathematics, okay? And that is the danger.
Okay, so then I really want to ask about your business.
Why? Let's get through these things. Okay, just look. Because pictures are worth 1,000 words, okay?
If we have to fight, we'll fight. Okay, no, we got to keep going.
It's for my kids, okay? This is a chart that was projections by the U.S. Treasury of debt that they think the public is going to hold. And I need you guys to look at where it's been historically up to the year 2020 and see that total debt to GDP in the USA has always hovered around 100%, which means their total debt is about the same size as their economy, $26 trillion. Today, total public debt is $31 trillion in the USA. But here's the crazy thing, people. These are their projections. This is not made up. They assume they're going to be able to have total debt 4 times the size of their sales. Run through those same numbers with your company. It doesn't work. The math doesn't work. It implodes. How do they solve this? They print more money. And when you print more money, what does that do to the value of the existing money? The existing money debases. Debases. Actually, here's a horrible joke. If your money lived in your house, where would it live? In debasement. Ha 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 ha. All right. Fiat money is a trap. It steals your wealth because they print more of it, and when they print more of it, the value or the purchasing power of that existing money goes down. You guys are all in real estate. I love you guys. Real estate's a great hard asset. But I hate to break it to you, you've made no money on your hard asset. You've preserved value, and you think the price of that asset has gone up? No. It's the value of the unit of account has gone down, so it takes more of those same dollars to buy the real estate from 100 years ago. Why? This irresponsible fiscal management. All right. Oh, good. Now we'll talk about my pubs. Guys, can you understand that the people running the countries are printing debt so that all they can do is stay in power, and they don't care about the 4 years after they lose their power? And they're kicking the can down the road. So, run through some quick math here. This is the distribution of federal debt in the USA, which means they have to refinance this. When it rolls over, debt never matures, it needs to be refinanced. The cool thing is, they've lived in an era of low interest rates where the cost on their balance sheet of that debt was historically low. Well, what has happened to interest rates in the last 3 years? You guys know that interest rates have gone up, which means when the debt matures, they're going to have to pay a higher coupon and more interest expense on that outstanding debt, right? Okay, any grade 3 student would look at this debt rolling over and go, Dad, our historical debt is maturing at 1.5%, and 10-year treasuries in the US now are 3.5% or 3.75, and short-term debt is 4.5%. That's not a good thing, Dad. Aren't we going to have to pay more interest expense on our debt just because interest rates are higher? Yes, you are. And this thing was run with interest rates at historical lows, which is to say, it's even worse. Okay? So I hate to paint a bad picture, but when debt matures, it has to be refinanced. The only way they can do this is by printing more money.
So in 2023, we have what, $5 trillion rolling over? Is that right?
Percent of debt that matures in the next 3 years is 35% of the $31 trillion outstanding in the USA, which is $10 trillion of debt. And you increase that coupon from 1.5% to 3%, that's 2% on $10 trillion. Do the math, people, that's $200 billion of increased interest expense. This is called a debt spiral, and it will turn into a death spiral. It would have been a death spiral if it was a company, but these guys can print money. So here's the summary, and then we'll get to your question. Thank you for putting up with me. At the end of the day, hard assets are good. Is real estate a hard asset? Yes. What happens if Canada falls off the face of the earth? Well, you got a house in a country that's a piece of shit. Okay? So, hard assets are good. Gold is good. And let's say you're trying to escape Canada and you got a bunch of gold on you. Okay? Good luck. You know, there's orifices here and there. But at the end of the day, understand that hard assets are good, soft assets are bonds. Bonds fund this fiat Ponzi, and if you own a bunch of fixed income assets right now, you're a fool. Because those fixed income assets are contracts that are debasing. Why? Because they're a fiat contract, and the fiat is the unit of account that's debasing. So you lend money to the government today. You lend $100 to the government today for 10 years, you'll get 3% coupon, and good. If they print enough money, you'll get your $100 back in 10 years, and what's that $100 worth? Like 65, okay? You're an idiot. And by the way, I spent my entire life in bonds. I have an opinion. Hard assets are good, bonds are soft assets. What is the best hard asset that's ever been created by mankind that's transferable, portable, decentralized, nobody controls it, and you can store it in your fucking head? It's called Bitcoin, people. It's the most important financial innovation I have ever seen in my life. And I'm not telling you you have to own 100% of your net worth. In fact, I do not. But if you own zero, you failed grade 11 math, you're coming out to learn something, and you're going to say, I heard this lunatic on stage talking about Bitcoin, and the newspapers tell me Bitcoin is a fraud and a Ponzi, and then you go on Monday and look at yourself in the mirror, you wasted your time here, okay? Because you've got to understand, they don't want you to understand how beautiful Bitcoin is. Because Bitcoin breaks the fiat Ponzi.
Okay.
Very simple. Over to you, Tom, and thank you for listening.
Yeah, just by the passion in your voice, it's obviously you have some concern on what you're looking at because of the mathematics. I think we're being cyber attacked again. I think we're being cyber. So like it comes across that you have a lot of passion because of what you're seeing. What I'm curious about is if you remember the late 1990s, there was something called long-term capital management. And then there was like the Asian flu, and it was a big like financial crisis. And then if you remember 2007, 8-ish, there was the great financial crisis. If you were to compare how you feel about what you're seeing in the markets today compared to great financial crisis and maybe the late 90s,
yeah.
Could you tell us the difference? Because what that's going to do, I think, to us is help kind of rate where you're coming from.
So great question. So look, I graduated from Cornell University in the USA, came back to Canada in 1988, and I worked for the CFO at the Royal Bank of Canada. Great guy, Emile Bolduc. And my first project was the Latin American debt crisis, okay? So the banks had lent too much money to third or lesser developed countries like Mexico, Argentina, Brazil, and they had all defaulted. Why had they defaulted? Because they were like this, okay? This happened in 1988 with the Latin American debt crisis. I go to Emile and I said, Emile, the Royal Bank of Canada is insolvent, which is to say if we mark to market those loans, Royal Bank had no book value of equity left. And you know what Emile said to me? God bless him. I know, don't tell anybody. Holy effing F, okay? I'm 24 years old, and Canada's largest financial institution is bankrupt or insolvent. Why? Irresponsible lending, irresponsible fiscal management to countries who had budgets that looked like this. Now, very simply, that was LDC, 1988. Then you talked about long-term capital management. Okay, how did they solve the Latin American debt crisis? It's called the Brady bonds, Brady plan. It was ingenious, but it basically involved swapping 5-year bank loans for 30-year debt that was secured by US Treasury zero-coupon bonds. I could get into that later. Essentially, it kicked the Latin American crisis up a level. Long-term capital management, 10 years later, 1999. Wall Street shenanigans almost brought down Wall Street. How did they solve it? They kicked the debt up a level to the government again. 2008, 2009, I'm trading at a hedge fund. March 2009, I would go on the train to work, and we were crushing it. We were short the same stuff that Michael Burry was short. And I was shaking because I thought the world was ending. I thought the world that I was responsible for my kids was coming apart at the seams. So that's the most nervous I've ever been. On the train, March 2009, we pulled it together with all sorts of Treasury shenanigans, again, kicking the debt to the highest level, to the government, from the financial system to the government. Then came COVID and all of that printing of money to stabilize the global financial system. Again, we kicked it one level higher. It's over. It is now over mathematically. There's no way we can get out of the debt spiral. So how nervous am I compared to the great financial crisis? I'm more nervous than I've ever been. And that's not because I want it to go this way. It's just because the mathematics don't allow it to go any other way.
So let me ask this question. You have some ownership in some businesses in Montreal. I'm going to mention what they are. Is that okay?
They're pubs, Irish pubs.
Yeah, they're Irish pubs in Montreal. He's a Habs fan.
I'm a Habs fan because I grew up in Montreal, but also because our revenues are materially impacted by
the Habs
too. So,
yeah, okay,
you know.
I respect that. Okay, but my question to you is: in 5 years from now, with these Irish pubs in Montreal, with the world the way it is, what will be the biggest challenges of that particular business? Do you think? And the reason I'm asking that is to try to paint an everyday picture for how the world might look to that business in 5 years. Is it labor shortages, labor costs, food shortages, food costs? Map it out.
I'm going to tell you that within the next decade, our biggest problem could be protecting our plant property and equipment from roving people that want to break into our restaurants and steal our food. Okay? Why? Because when you get into a debt spiral like Venezuela, all you have to do is look to what's happening in Venezuela and paint the same picture in Canada. Guys, I don't want this to happen. You need to understand, I'm painting this scenario because the mathematics are leading us there.
So then I have another.
But I don't want it to happen. So there are solutions, but we have to start by recognizing the problem and acknowledging the problem. Sorry, go ahead. We have 9 minutes. It'll be over after this, and then it'll be cheerful.
No, but that's why you're taking this so seriously, because I know it's stuff that's not easy to talk about, and I appreciate you talking about it, because if we don't think about this stuff, I like to plan for the worst, and then if I plan for the worst and have the worst covered, then life's great. But I like to know what the worst could be, so I appreciate you.
And we have not rehearsed these questions, by the way. That's God's honest truth. I have no idea.
No, well, I have like 30 questions.
Okay, but that's cool. Keep going.
Okay. I've asked like 2. Here we go. But you've covered it all, so it's been great. I have this question. In the situation we're in now, I have this where if the Fed raises rates to fight inflation, then we get what you put on the screen, where the interest costs get up. So if the Fed raises rates, these interest costs all go up. On the flip side, if the Fed changes, pivots, whatever we want to call it, or the Treasury decides to really weaken the US dollar, we get inflation. So like one alternative is raise rates to fight inflation, but then if they do that, the cost of this goes astronomically even worse. So the alternative is...
This accelerates, the blue bar gets even worse, okay?
So on the flip side, if they cut rates to make things a little bit more manageable, we get even more inflation.
Correct.
So am I correct in thinking these central bankers have now painted themselves in the corner? So what we've done is we've kicked the debt problem.
Can you get to the question? Because I know the answer.
You know what?
I'll give you the answer.
Where's Nick? Nick, where are you? We need your help.
The answer is Bitcoin. Okay? Like, I love your question. And by the way, Tom and I are brothers from another mother. Okay? And the reason we are brothers because he knows the answer and he's trying to sugarcoat it. I ain't sugarcoating anything, people. I love having real estate in Oakville. I'm very concerned that everybody who doesn't have Oakville real estate is going to come to Oakville to try and possess some of my real estate. Like, seriously. This is what happens in countries that default. Don't overthink this. I know you guys love to think everything is fine and dandy because the CEO of our country says, the budget will balance itself. But that ain't how businesses or countries are run. Mr. Trudeau, you're a fucking mathematical illiterate, and I don't care. Sorry, look, I don't care about his political affiliation. I care about the fact that he is ruining the future of our kids because he says budgets will balance themselves. They do not, and this is proof that they don't. The solution is hard assets, and in my opinion, The most important hard asset is one that's portable, one that you can carry, the seed phrase, in your brain, so if you get out of this godforsaken mess, we don't have to move, but if you do have to move, it's transferable and portable. And I'm an optimist, believe it or not, but I'm also a realist.
Are you sure? Are you sure?
I am a realist, okay?
Okay.
I am a realist.
I'm glad you told us. We're good.
We have 5 more minutes. Yeah. We have 15 questions. Give me your best shot. Give me your best
The questions are gone.
Give me your best one. Give me your best one. Give me your best one.
I think my best shot is somebody who's just hearing you say Bitcoin for the first time. It's an impossible question. What percentage of their net worth should be allocated to it?
I love you. Because I was going to answer that question if you weren't getting
So it didn't matter what I asked you.
The only wrong allocation to Bitcoin, people, is owning 0. After that, you have to decide how much Bitcoin as a percentage of your net worth you should own. I own 3 properties. I'm sort of like these guys. Now, 2 of them are in the United States, because that will be the only country that lives. Canada will default 10 years before the USA. That being said, my most valuable asset is in Oakville. And it ain't transferable and it ain't portable. And if the government really wants it, they can get it without my control. Bitcoin is your insurance on this, because I don't want
So that's
this.
how you're looking at it. It's an insurance policy.
It's an insurance policy. My percentage exposure in Bitcoin compared to my global net worth is about 30%. But my advice to you is if you don't own any, you're not managing your risk properly. And if you do get involved, 5 to 10% is the right exposure. And don't take your exposure from your real estate assets. Take it from your bonds or your soft asset exposure. Hope that helped.
No, that's great. So can we talk about what you're you've started something new. Do you want to talk?
Give me other questions.
Yeah, I mean, okay. No,
because this is that important. At the end of the day, I'm going to talk about something. But, okay, let me reiterate. I
can't read
Tom and Nick are extremely important to me because they allowed me to see and be introduced to people like you that care about the future. That's why you are here.
I got a good one for you.
So go ahead.
Sorry, now I'm interrupting you. How does a strong U.S. dollar, I don't know if anyone tracks the value of the U.S. dollar, but last year the U.S. dollar really went on a tear compared to other currencies. It got really strong. What does a strong U.S. dollar do to the treasury market and why?
Okay, so.
And the treasury market is the credit markets.
The U.S. dollar is measured against a basket of global currencies in a security or an index called the DXY. Are people familiar with the Dixie? The DXY is a measure of the strength of the US dollar compared to all other, or a basket of all other global fiats. Primarily the yen and the euro, but there's 6 others in there. Canada makes the cut. We're like 1% of that basket. But the point is, all fiat currencies are in the same problem, which means they're all debasing. They are just decaying or debasing at different relative rates, okay? So don't say, oh, I'm going to take my money from Canada and put it in the USA because they're in better shape. People, this is the USA. This is the global reserve currency of the world, and this is their balance sheet or their income statement. Look at this garbage. And you're going to tell me I'm going to be safe in the US dollar. You're a retard. Excuse me, I'm not allowed to say that. Okay? My sincere apologies. It's my trading floor lexicon coming out. All fiats are melting. It's just various rates of decay or different rates of decay. Emerging markets get crushed when a strong US dollar happens. And when the US dollar, as measured by the DXY, turns, you'll see a bid to what's called risk assets. Okay? So the US dollar that's measured by the Dixie topped out at 114, and now it's come back down to around 103. What's happened to risk assets? Stock markets have recovered, emerging markets have recovered. Doesn't matter. The US dollar is a global wrecking ball because when the world panics, they rush to the safety of the US dollar. They're rushing to the wrong asset, people. They should be rushing to Bitcoin, because Bitcoin will become the global reserve asset. and replace U.S. treasuries as a store of value.
Because you think people will just look around and go, oh my gosh, like I have to hide my capital somewhere, and they'll be forced to learn about Bitcoin.
You will learn about Bitcoin because your kids will teach you. That's the beautiful thing. Much like me, if I have a problem with my iPhone, I ask my kids how to fix it. I don't know how to fix it, okay? My dad never had a credit card. I have plenty of credit cards. My kids know how to work an iPhone. I grew up with a rotary dial phone, okay? People, you understand where technology is going? Bitcoin is the most beautiful financial technology I've ever seen. Get yourself a Bitcoin wallet and transfer money anywhere in the world, peer-to-peer, and it will settle in 10 minutes. Have you guys tried to set an international bank wire lately? Do you ever feel like it's not even your money? What are you doing this for? What's the purpose? Are you a drug king? Hey, it's my fucking money. I'll send it where I want. You work for me. That doesn't go that well, okay? Thank you so much. Bitcoin, I can send it anywhere.
Do you want to talk about the Bitcoin Opportunity Fund?
Look, I'm involved. No. I'm going to put this up. I think the world is going to rely on Bitcoin. I'm part of a fund. I wish you could show my ugly face there.
The people, the pictures are at the end. If you keep going, the red, green button.
It's not me, it's my partners, okay? These guys are some of the smartest people I've ever met in my life. Larry Lepard and I are frequently on Bitcoin podcasts together. James Lavish, a Yale hockey player who I've met. Harvard MBAs, Cornell MBAs. Not that MBA means anything, but these guys have put a lot of effort into educating themselves like you guys are doing right now. These guys are the partners in a fund that I believe are going to change the world by investing in the companies that are building on the Bitcoin blockchain. Brilliant stuff like Ibex Mercado, who are the merchant solution for Bitcoin in El Salvador. Guys, this is where technology is going. Charlie Munger hates Bitcoin. Charlie Munger doesn't understand technology because when Charlie Munger was born, there wasn't even a rotary dial phone. See where this is going? Listen to people who can see the future, not someone who should not buy green bananas. Do you know what that means?
No.
Don't buy green bananas because chances are you won't be around to eat them when they ripen. Charlie Munger should not buy green bananas, okay? Not that I wish that on anybody, but don't listen to a 99-year-old man when it comes to the future of technology. Thank you very much.
Listen, everyone, Greg is going to, so we're not taking a break. We got Ali and Omar coming up right now. Greg's going to stay in the room with us. And then after these guys, Ali and Omar, we're going to take a break. And Greg has agreed to stay around. So at the next break, he'll be in that far corner over there to answer any questions that you have. If you want to talk to Greg, thanks for sticking around.
Thank you so much, guys.
Well, let's give Greg a big round of applause. Thank you.
Thank you. Children.
Thank you, Greg. Greg, and you go that. Oh, you're going that way. Yeah, we're good. Thank you so much. You're good. Oh, wait. One last thing. One last thing is Ali and Omar come up. Thank you, Greg. Thank you.
Thanks,
one last thing. We didn't talk about your grandfather, and we didn't talk about the Foss mobile, but we got you something. For the theme of this event is Top Gun. And we made a Your Life, Your Terms camo t-shirt that we have outside, and we wanted you to have one of our camo t-shirts that says Your Life, Your Terms.
I'll wear this at Bitcoin Miami, okay? 50,000 people last year at Bitcoin Miami. I was on stage with 4 billionaires, okay? Carlos.
The Mexican guy.
Ricardo Salinas.
Yes.
Marcelo Clore, who ran SoftBank, okay? And there was Foss. Crazy shit. I'm on stage. I know I'm on stage.
You were wearing our t-shirt at the Bitcoin.
I'm going to wear this.
Yeah.
Thank you so much, guys.
Thank you, Greg. Thank you. Thank you.